Hello, everyone. My name is Manolis Sfinarolakis, the founder and creator of RealityCrowdTV, and welcome to RealityCrowdTV Episode 21, Real Estate Crowdfunding with crowdfunding platform Patchaland.com. We have a wonderful show today, but before we begin the actual meat and potatoes of our episode, I'd like to just go through a couple of ground rules for the viewing audience so that you can understand exactly how to participate. On every episode, we have a Q&A application. If you have followed the circle of Reality Crowd TV on Google+, you'll be able to submit questions through this application so that you can ask during the show to the guests or to us directly. Whatever questions can arise, you can answer through that. You can ask through that application. Additionally, you'll be able to look at the event page for any information on our guests. We have their contact information. We have their websites. We also have an amazing opportunity to learn more on LinkedIn. There is a new LinkedIn group called Real Estate Crowdfunding Education and Networking. And then there's also another great event on July 17th, a presentation at the Boston Real Estate Investor Association that will be another webinar on July 17th. So make sure you review everything on the page so that you can be kept in the loop and contact everyone. My wonderful co-host, Jessica Sun. Jessica, would you like to introduce yourself?
Hello, I'm Jessica Sun, CEO of Reality Crowd TV. As many of the followers have been watching these shows already know, I just want to thank everyone again for joining us. And I know that real estate and crowdfunding has been really popular lately when we've had Google Hangouts about this. So I hope you ask as many questions as you have, reach out to us if you have any more questions, but this has been a really great topic, so we wanted to bring it back again. So again, enjoy the show.
Wonderful. Thank you, Jessica. And so now let's introduce our guests. We're very lucky to have with us Jason Fritton, the co-founder and president of Patchaland. And Jason, thank you for joining us, and please introduce yourself and your company.
Absolutely. Thank you, Manolis. I really appreciate it. It's a pleasure to be here. My name is Jason Fritton. I'm the president and COO of Patch of Land. I was a crowdfunding activist that was active in the initial lobbying for the crowdfunding exemptions passed in the 2012 Jobs Act, and Patch of Land was formed to respond to that particular opportunity. So we have a great portal that focuses on short-term, high-yield debt, and we've been around for about 8 months now. We've done several $1 million worth of deals, and we have another $2 million set to go this month alone.
Wow, excellent! It looks like things are heating up in the real estate crowdfunding space.
Very much so.
That's great. It's great. And I'd like to introduce our second guest, who is Chris Goodson with Goodson Law Offices, and he is also a developer, and a developer in a big way. So, Chris, please introduce yourself and what your endeavors are.
Sure, Christopher Goodson here. I'm an attorney, but I've been investing in real estate since 2001. Bought my first apartment building the day before September 11th in 2001. So I got off to a interesting start in Jersey City, right across from Manhattan. Since then, I've been doing a lot of different type of investing. I founded the New Jersey Real Estate Investment Club. So for the last 10 years, we've been running an organization similar to many of the other REIAs, and currently doing 7 rehabs. So I have since done tons of different types of real estate deals, from apartment buildings through development, and now I'm doing a lot of rehabbing. So I got 7 rehabs going on right now, including some through Patch of Land, and my law office is a 5-attorney firm out of Montclair, New Jersey, and we represent crowdfunding, such as Patch of Land.
Wonderful. That's amazing. And so you're doing 7 rehabs at once, and how many of those have you done with Patch of Land?
Well, I've done 5 deals with Patch of Land so far. Right now, we've got 1 really premium house, and then I've got 2 other houses that we did a blanket loan on that's still outstanding. Those are both under contract to sell. Those rehabs are complete. But we just finished 1 major rehab, put $150,000, $170,000 into a single-family house right here in Montclair, New Jersey.
Excellent, and we're definitely going to go through that deal very shortly. But for a lot of our viewers, I think a lot of our viewers are being introduced to real estate crowdfunding for the first time. And Jason, as a representative of Patch of Land, can you give us a layman's explanation of how you're able to do capital raising through the internet? What laws are allowing you to do this? And kind of just a very brief explanation of what is real estate crowdfunding.
Sure. So for those of you who don't know, Congress passed the Jobs Act in 2012, and the Jobs Act included several exemptions, including Title II, which has been enacted by the SEC as of September 23rd of last year. And what that allows us to do, which is different from the past, is to publicly advertise our securities. Now, I'm sure you're all familiar with Kickstarter and crowdfunding through Kickstarter, but Kickstarter is called rewards-based crowdfunding. If you pledge some amount of capital, some amount of money, let's say to the Veronica Mars movie, you might at best get into the Veronica Mars credits. You might be able to go to see it on the red carpet on opening night, but you're not actually going to get any sort of financial gain from the proceeds of the Veronica Mars movie. So what the Jobs Act has done is changed that at this point. So now we have the ability to crowdfund and go out to the crowd in a very public, open manner, a very transparent manner, raise capital online for good projects, and then show those investors a solid return on those investments. And that's essentially what crowdfunding is. It's public, online capital raising for investments. And the biggest beneficiary of this new regulatory vehicle has been real estate. In fact, it's almost as much as many of the others combined at this point. It's filled a really good gap in real estate because, as many of you know, it can be very difficult to get an investment loan from a bank in a reasonable amount of time. It can be very difficult if you don't have the right connections to raise equity capital for a project in real estate that you might have an interest in, but they generally are fairly promising, or they can be fairly promising, fairly lucrative investments, simply because real estate is real. You can go and knock on the door. You're not investing in somebody's yogurt stand down the street. You're actually investing in something that does exist. You're actually investing in hard assets. And so real estate crowdfunding has really, really taken off lately. And we operate under a Regulation D private placement, Rule 506C. That C paragraph allows us to publicly solicit to the public, as we're doing now, and raise funds for our projects. So it really allows us to reach a huge, broad audience and make good projects happen, help extremely professional developers like Chris with great track records get access to capital where they may have difficulty doing it otherwise in today's overregulated environment.
Wonderful. And just to clarify, too, the public solicitation, the only individuals who can invest in a real estate deal under the rule that you're currently using are investors known as accredited investors, meaning
right.
they make $200,000 a year or are worth $1 million in net worth. I do want to make a clarification, though. This is for the investors, meaning if you wanted to own a piece of the deals that you're going to see on patch of land, you have to be an accredited investor to actually invest and own a deal, but you don't have to be an accredited investor to bring a deal to get funded on the platform. I think a lot of people, like when they hear, oh, it's only for accredited investors, they immediately shut off their ears. Mm-hmm. But if you're in the real estate business, you need to realize that you don't have to be wealthy to bring a good deal to their platform. If you have a track record, if you have a good deal, you could bring it no matter what your income is.
That's absolutely true. And in fact, while we can only work with accredited investors right now, there are additional provisions of the Jobs Act coming live likely later this year, including Regulation A+, that'll allow us to work with unaccredited investors too. And realistically, that's the holy grail of crowdfunding. Crowdfunding is supposed to be a democratization of capital formation online. And that's really what we're going to right now. Because of the limitations in the law that we have at the moment, we can only work with accredited. But it won't be long before we can work with everybody, and we're really looking forward to that.
Excellent. Yeah, I mean, so are we. There's going to be a lot of interesting laws coming out very shortly, and we truly hope that the Securities and Exchange Commission, who's regulating this industry, acts in a timely fashion. So now let's turn our attention again to Chris. And but before we show Chris's deal, Chris, can you tell us kind of how you and Jason met? How did you guys begin the relationship? how did you hear about Patch of Land, and I guess tell us about that experience.
Sure. For a long time, my firm has represented a lot of real estate investors. We do 20 to 30 closings a month, and the majority of those closings are for rehabbers or buy and hold. So I believe it was actually one of my clients who brought me to Jason, and I think it was actually as a capacity as the attorney. So I started as an attorney for somebody else who was working with Patch of Land, and I said, hey, I do deals too, and then we started a conversation. That sound about right, Jason?
Yeah, no, actually that sounds actually about perfect, and it's probably one of our biggest strengths. We've got a really good service, so when people see what we're actually doing, it makes sense to them as well. So our word of mouth business has been very, very strong. So we get referrals from Chris, we get referrals from the other borrowers, developers that we work with. We talk to other professionals in the crowdfunding industry. We're actually getting a massive, massive amount of referral business at this point, millions of dollars in loan applications a month.
So the client reached out to me and said, hey, I got this new lender that I plan on using called Patch of Land, and then I started using Patch of Land myself, and then that turned into me referring other clients to Patch of Land. So it's all kind of churned upon itself, and referrals bring referrals bring referrals.
Great.
That's excellent. I mean, and actually for the audience, I think this is good to kind of tell the audience too. You guys are kind of revealing how business is done. Sometimes it's just as simple as a phone call, and then it's as simple as people just referring great service to other people that they trust. So, part of our show is also based on entrepreneurship. So you guys, thank you for kind of giving us that background, because a lot of people wonder, how do people become successful? And it's really about building relationships with people that you trust.
Completely agree. Absolutely. Doing a good business, people will hear about you. If other people are happy with you, they'll tell other people. It's one of the strongest ability to earn business.
It is. Nothing is like hearing from someone else, or at least your friend or someone that you know, that they had a good experience. That's more important than hearing from like an owner of a company, for example, because of course they want to sell their stuff, but if it's your friend or a network, then obviously you can trust them more. So.
Yeah, and with crowdfunding, which is online, in the first place, it's that much more popular. Your social network, your referrals online, they carry a lot more weight than some sort of advertisement would.
Speaking of popular, we always joke that we're trying to make crowdfunding more popular than Kim Kardashian. So hopefully that'll happen soon enough.
We're working on it.
I already like crowdfunding a lot more than Kim Kardashian.
Excellent. So Chris, I'm going to share my screen so you can tell us about the deal that you have on Patch of Land. So give me one moment here, and I'll share my screen. All right, so let me know. Do you guys see the screen that I'm on?
Yes, we do.
Perfect. And so we'll just scroll down, and we'll come back to this deal in a moment, Jason. I know you wanted to say something about the newest deal on your platform, but let's first kind of go through the deal here. So this is the upscale full rehab in growing Montclair, New Jersey. And the floor is yours, Chris.
Okay, so Montclair happens to be my hometown. I've done other deals in Montclair, which is why I was so confident about this. A couple of blocks from this house, we had recently done a very similar transaction. Now, we borrowed $321,000. Our purchase price was around $300,000. We had put some money down towards the purchase in the beginning, all right? So we had put some of our own skin in the game. But then we started doing the rehab, and we spent about $150,000, maybe $170,000 in the rehab process. So Patch of Land was able to fund the majority of the acquisition, and then at least the first 3/4 of the rehab. Now, the rehab is just finished up recently, and we had to put in a good chunk of our own money, but that was at those last few stages. So it was the majority of the acquisition and then the majority of the rehab itself. We did a complete gut rehab. It's a 5-bedroom, 5-bath house. And we did everything from a new heating systems, cooling systems, full kitchen, the kitchen was completely gutted, all the bathrooms gutted. It was the definition of a complete gut rehab.
And if I can step in, projects like this is what makes crowdfunding so appealing. So on one end, I've got a borrower like Chris, who, Chris, if you don't mind me saying so, is a high-income individual with an amazing credit profile, an amazing reputation in the industry himself, with a project in a very high-end community. That just the numbers make perfect sense, and we're able to show returns on this at 12 or 13% to our investors. And not only is it backed by a guy like Chris, but it's also backed by first position lien on the title. So there's a good level of security for our investors in this, and we're able to pay out monthly on that. And these are type of opportunities that perhaps a potential investor wouldn't have access to otherwise, because maybe they don't know guys like Chris. Maybe they haven't been in the real estate industry. They don't have the time, or the experience, or the skill set necessary to work within the real estate industry, but Chris does. And what we're doing is just bringing these two groups of people together.
And also, that person may not have $400,000. I'm not going to crowdfund my own website. If you had $400,000 or $500,000, and I might borrow it from you, but if you've only got $100,000 to put in a deal, you need to work with somebody else in order to a crowdfunding site to make that happen. And a little bit more about this project. Montclair has got 5 train stops in it. So this is a commuter trip, and I always make this assumption, into Manhattan. When I say commuting, I mean into New York City. So that's part of what made this project so desirable.
Wonderful, and I like kind of the user interface here, because I see if our viewers are familiar with kind of your traditional Kickstarter, it does kind of look like that. I like how you guys, even though it's a very complex financial transaction that you're doing here, you're making it very easy to understand the details of the deal, how you're coming up with what the after repair value is, the ARV. So I do like the fact that you actually had an appraisal. And this appraised value, is this an actual appraisal company that went in to actually do this?
Sure. Let me jump in there. So we got a third-party appraisal on the property. Now that's $600. We've already gotten unsolicited offers in excess of $600. This property should easily go for between $650,000 and $700,000. So that appraisal was for a house in average condition. So a house without the granite countertops and without brand new redone was $600,000. So when you compared it to the sales of other houses, that's what they came in at with. So we were at 70% of appraised value, and that's of ARV. When we say ARV, it means after repaired value. But the numbers are actually much lower than that 70% because a premium house in today's market sells quickly. Right now in northern New Jersey, and different markets are different, a house that is completely rehabbed is selling very, very quickly. While this is still a buyer's market, if the property is not in premium condition, they're saying, next, show me the next house. So a fully rehabbed house sells quickly. One that needs just a little bit of work sits. And I always use the comparison. When I bought my house in Montclair 11 years ago, I said, wow, there's no half bath on the first floor. My guests need to go all the way upstairs to use the bathroom. You know what? I better jump on this house because it's a tight market. So I put in the half bath myself. Today, people walk into a house and go, I don't like the color. Show me the next house. That's how the changes happen.
Yeah.
A house that looks good will sell quick. I'll have this. We are having our first open house on this Sunday. I expect to have this property under contract within a week, 2 weeks at the most. But that shows you how much the market's changed to needing that quality product.
Yeah. And the market always changes towards what someone thinks is good and what someone thinks is not, depending on what everything else is going around them. So you always have to keep up with that. So it's tough, but you guys obviously seem like you know what to do.
Yeah, we do traditional underwriting as well. We're a little bit different than most crowdfunding sites in that we find people like Chris, we find projects like the one he's discussing here. We'll curate and underwrite them internally ourselves. And when we've come to a decision that we like that project and we think our investors will like that project, we'll actually fund it ahead of time. So we use internal capital, and we'll make that project move. and make that project actually happen. And then we bring it out to the crowd. So the crowd knows that we already have our money into it. That project is going to happen. Whether we get it crowdfunded to the complete amount or whether somebody only puts in $1 and that's it. That project is definitely going to happen. We believe in our borrowers. We believe in people like Chris. We believe in our projects. It also allows us to move very, very quickly. It allows us to bring the best deals to the crowd as opposed to putting a large amount out and hoping that some of the crowd likes some of them.
Very interesting, and I kind of like this table here that we're looking at, the capitalization table. So you're not. So Chris came to it with $50,000 of his own money. So he came with the $50,000 down payment, but the rest you didn't only fund the purchase price, you're also funding the rehab costs. So that's actually amazing. So essentially, you're doing hard money lending on the internet, but are your rates lower than a hard money lender?
Yeah, we try and make sure that we're very, very competitive, more reliable, more flexible, and faster in each local market that we go into. So the rates are different. New Jersey and New York tend to have higher rates than California might. Florida is about midway in between California and New York. Texas tends to be very, very flush with capital, so the rates are a little bit lower. But we do tend to make sure that we are appealing to our borrowers. Our borrowers are customers as well as our investors. Nearly all of our borrowers, our developers, have come back to us for additional funding because we've been able to provide a really good service and at a good rate.
Excellent. And I just want to scroll through this just for a little bit. The next question, I guess, is once this project got approved to be listed on patch of land, how fast did this project close?
So once we had negotiated with Chris, we had the appraisals done, we had the underwriting done, the investment committee looked it over and signed off on it. We were able to fund it within just a matter of days. So at that point, it just comes down to how quickly can the project close, how quickly Chris makes it easy because he's an attorney. But how can we get representation on our side to make sure that the project happens out there in New Jersey, get the title work done and so on. Generally, it happens within days. Once we've decided that we want to close on a project, it usually is in the borrowers, the developers' court at that point to let us know how quickly they can close. We, from start to finish, from getting a loan application or a project application on our site, we can close generally in about 7 business days.
That's really fast. Yeah, it's quick.
Oh.
It tends to be a lot better than what most of the competition can actually do out there, especially concerning the bank. So, and that's that's necessary in this particular market. These deals move fast. Mm-hmm. Chris might have a project that he needs to get funding for in a matter of days. If he doesn't, he might lose it. These are high opportunity projects in a growing market, and our ability to pre-fund them and make it happen quickly allows us to bring the best projects to our investors.
Absolutely, speed is so important in this kind of market. So you guys definitely.
Let me just add to that. Most of the time, we're buying distressed properties, which means we're putting in offers claiming to be all cash. Whether we are or not, we need to move fast. If I want a short sale bank to accept a lower price or an REO or any type of offer, it's got to be with a waiver of that mortgage contingency. Mm-hmm. Nobody wants to wait 30, 45 days for a Fannie, Freddie, or FHA project. So the speed in which Patch can move makes a very big difference on whether or not I'm going to be able to get that deal. And once you have a relationship with a crowdfunder like Patch, I know what he needs. I know what he'll fund and what he won't fund, which means I have the confidence that I can waive that mortgage contingency. And waiving that mortgage contingency adds a more strength to my offer. And if my offer is beating out the next offer, then that's the name of the game.
Absolutely. So everything seems very fully transparent. So you don't waste his time, you don't waste your time. Everything is just boom, 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 business. Get down to business.
Question for you, Chris. I was just thinking of this, and maybe it's because Patch of Land does it in an innovative way. Patch of Land actually pre-funds the deals. From my understanding, you guys would pre-fund the deals, take on the risk, then you go to the crowd to take yourself out of the investments. Is that correct, Jason?
Yeah, that's right. So we only do the projects that we like. We put our money where our mouth is. So there are other competitors out there, and we don't even call them competitors. Everybody in this industry is just helping to increase exposure for crowdfunding in general. But there are folks out there, portals out there that will kind of do a Craigslist type approach and just put up just about anything and let their crowd figure it out. We only put the things that we think are good investments up.
Okay. And then Chris, I was just I even wrote an article about this in the past. I see the future, and maybe it won't be applicable to Patch because you said you waived the mortgage contingency, but I almost see a future, and as an attorney, I'm wondering what you think about it. Could real estate potentially see a contract that says subject to crowd financing?
Sure. It would be any type of mortgage contingency of any kind. You could specify, if you look at a standard New Jersey Realtor form contract, there's a little box that says FHA, Fannie, Freddie. What if you can't get a mortgage with a certain interest rate, then you don't have to move forward with the transaction. So yes, I do foresee a day that says Fannie, Freddie, FHA, or crowdfunding as a checkbox on that contract.
Yeah, it's interesting. I think it's going to be there much sooner than we think, especially if these unaccredited investor laws come into play quickly. I think we'll be seeing that really, really soon.
Yeah, as the credibility and track record of this new industry increases, you're going to see it start to take up significantly more of a mainstream position in capital formation. We're already getting a ton of interest from some of the big existing capital players and big existing capital structures. In fact, we've got LOIs and term sheets from a few. And it's not long before some of the bureaucracy catches up with it as well and puts those check marks up there.
Yeah, it makes a lot of sense. Have you guys seen any traditional real estate agents or brokers coming to you at Patch of Land and saying, how can we help our clients better?
Yeah, absolutely. So as I mentioned earlier, Chris has referred us to several of his clients, and we've been able to help them out and get them funded. We have been working with brokers who bring their clients' deals to us in order to get them funded. We've been talking with several different real estate companies to be able to help where they get things funded where they can. They don't have the flexibility to do so. So that there's a lot of opportunity. You're really starting to see this get more attention in the area.
Excellent. I like to think, I used to take some real estate education classes myself, and I'd like to think the bird dogs of today will become the crowdfunders of tomorrow.
In fact, kind of on the same note, we're actually presenting at the National Real Estate Investors Association in Denver here tomorrow. So it's one of the largest real estate investors associations. They're going to take it back to their member branches as well, but they specifically asked us to come in and present. So you're starting to see a lot of these more formal, long-time, credible associations take notice of this particular method of raising capital.
Absolutely.
Wonderful. And Jason, I see. Actually, let me go back one step. This is how the momentum's building for the viewers to see here. There's only one deal. You guys have oversubscribed essentially. Everything else has been fully funded that's been on here, and so you guys only currently have one deal. So I guess month over month, have you seen an acceleration? Like, is the growth in this industry that you guys are seeing, is it really rapid? Is it almost like you almost can't handle it? How is the growth in this industry going?
It's just enormous. It's exploding. I wouldn't say we can't handle it. We are making sure that we're growing responsibly. We're not seeing any drop in our underwriting criteria. We are definitely seeing a massive expansion. So we've done, since we launched, again, we're a new company, but we launched about 8 months ago. We've done a few $1 million. This month alone, we're going to be pushing $2 million in deals. I already have more than $1 million to $1.5 million set up for next month, and we're not even there yet. Our investor signups are at 80 to 100% month over month. That 30 grand that you're seeing on the screen there for that project, the Great Neck project, happened I think in the last 15 minutes. We literally just launched that particular project. We'll have a good chunk of that funded just tonight, and we should be oversubscribed on that very quickly.
I hope it's the people watching our show who invested that 30,000.
More to come after.
Yeah.
Doing that while you can, guys.
Exactly. All right, cool. So yeah, so tell me a little bit about this. You said you just put this up today, right?
Yep, this is right. This is in the suburbs of New York City as well. Great Neck is a great town near Chris out there on the New York side as opposed to the New Jersey side. So this is a particular developer that had purchased a property with an existing dwelling on it back in 2010. So right in the midst of kind of that housing downturn, right when it's starting to pick back up. And he picked it up at a very good price, but the existing house on there was not up to what that neighborhood standards might be. It was an upscale area. So he did full demolition and tore it down and has been rebuilding. And the developer not only purchased the land and the property for about $400,000 himself, but also put about $200 grand worth of development work into it using his own funds, and now needs some help finishing off construction. So we've issued a loan on this for $550,000, and we negotiated a rate of about 12% annually for our investors. And the investor just needs to finish up construction. As you can see through the pictures on there, it's well underway. He expects to be in and out of this project within 6 to 9 months, but we've written it at a 12-month term. Credit profile on the borrower is excellent. The borrower has done over 200 projects himself and his company, so a great deal of experience in the area. So we've looked it over. It's met our criteria. We've gone over it with a fine-tooth comb, done a third-party appraisal, walkthrough, interview with the developers, background check, the whole 9 yards. And we feel that it's a good investment. We're funding it and bringing it out to the ground.
Wow, I'm looking at this 33 to 39% of ARV. This is, I mean, even if this guy just walks away from the deal, you're protected.
That's right. So we'll have a first position lien on the property as well as title and hazard insurance. We had an appraisal at about $1.4 million, but we're only lending $550,000. And in fact, the developer feels that appraisal is way too conservative and expects to sell at about $1.6, $1.7 million. In fact, it's already listed for sale at that price. So even at the appraisal price, through an independent third-party walkthrough, high-level appraisal, we feel that we're well secured on this. In the worst-case scenario, again, we're not in the business of foreclosing on anybody, but in the worst-case scenario, in a liquidation type of environment, we would be able to return most or all of our investors' funds.
And actually, let's talk about that. No one likes to talk about worst case, but if you do have to, if he does walk away, what safeguards do you have for your investors? Is Patch of Land physically managing these properties if they ever have to go through a foreclosure, or how does that process work? How do you protect people from an unscrupulous developer?
Well, actually, we do a lot of research on the developer themselves and their track record to make sure that we're not lending to unscrupulous developers. First off, we are lending to people, not to properties, where they are secured by property. So our worst case scenario, if in a situation that the developer, for whatever reason, fell off the face of the planet, again, nobody likes to talk about it, but eventually as crowdfunding companies do more and more business, just by chance in numbers alone, eventually somebody's going to get a project that goes sideways. If that happens, then we would take over the collection of that property and potential liquidation of that property. We would utilize professionals like Chris in his office, as well as specialized collection firms in the area, to be able to retain the property and then resell either on the open market, finish construction, whatever is actually needed to be done at that point. And as you can see on this particular project, we only lend to a certain value of that project, or a certain percentage of that value. So if we have to, we can take the property, though again, nobody wants to be in the business of foreclosing on anybody. We that never happens, but if we have to, we can take a property and liquidate it and return our investors' money.
Okay, excellent. So I'm gonna. Was there anything else you wanted to show us on your website, or should we just get back to the actual show and see if there are any questions?
Sure. Well, I just encourage your audience to check us out. You don't have to be an accredited investor to sign up and look at our investments and learn a little bit as well. You have to be accredited to invest, but you can look all you want, and we do encourage that. You'll learn a little bit about crowdfunding, learn about the industry, learn about what we actually do, and you'll have our number there at the top, and you can always call it and reach me directly, and I'd be happy to walk you through anything.
Wonderful, great. So let's talk about the future of the industry and where you guys see it heading. I know no one is no one has a magic wand, no one can predict where this is going, but Chris, let me get your opinion from an industry standpoint. Where do you see crowdfunding going? Where do you see real estate crowdfunding going 5 years from now, for instance?
Well, in real general terms, we are seeing a return to rehabbing. And I mentioned before that I ran the New Jersey Real Estate Investment Club. And if 10 years ago I asked how many people were rehabbing in a room full of 75 people, 50 of them would raise their hand. Okay. Fast forward to 5 years ago, I asked the same question, maybe 2 or 3 people. And that is rebuilding. Okay, so I mean the whole crowdfunding model is based upon primarily rehabbers, right? You can apply it to different types, but right now, particularly patch of land, the market is tied to rehabbing, right? The crowdfunding model is rehabbers are their primary client base. So as the real estate market recovers, we have a vast amount of distressed, ugly, unappreciated houses that just haven't been cared for the last 5-7 years. No one was putting money into their houses because it wasn't the place to go. So as the rehab market comes up, there's increasing demand for that, which will increase the amount of crowdfunding that's required. We need to turn this whole market around, and the people who are going to do that are real estate investors. The primary market there does not supply rehab funds. The only rehab funds available really right now is an FHA 203K loan. The market used to be filled with regional banks, okay? Your local regional banks were the ones that would give you that rehab funding. Well, let's be honest here. In 2005, 2006, they were giving away money to anybody, all right? Crowdfunding would not have existed in 2006 because Countrywide would give you a stated income, stated loan, the stated income, stated asset, 100% loan. So that's all gone. Guidelines were here, and they shouldn't have been. Guidelines are here, and they shouldn't be. Why? Because the market between here and here, right, doesn't exist, and these are qualified buyers who really qualify for those loans, but there's nobody taking up this space, right? The regional banks are still too scared to enter that market. So that means that as long as the traditional guidelines don't open up, and I don't see that happening too quick anytime soon, the crowdfunders are going to be able to take advantage of that rehab market, which is not owner-occupied single families, but anything that needs to be renovated. They're really the go-to guys, and their competition, the hard money, is a little bit higher rates and less easy to deal with. So as long as you see this rebound in the real estate market, as long as you see a distressed pool of real estate that needs the TLC, I think you're going to see a very strong next 5 years for real estate crowdfunding.
Wonderful. That was a very thoughtful response. And I'm going to actually have Jason answer that same question in a moment, but we do have our first question from the audience. We have Frank Spalding from CrowdFundMe magazine, and Frank's question is there a way for non-accredited investors to invest in real estate crowdfunding? And Jason, I'll actually let you answer that as you would know the answer to that question.
Sure. Yeah, actually, there are a few now. So Fundrise, one of the competitors, they work a lot with commercial real estate, and they do a lot of equity deals. They've been very successful, and they do a lot of Reg A work and that in-state work that allows unaccredited investors to invest it, through that regulatory mechanism. There are a couple of other smaller players as well that will do intrastate crowdfunding that within certain limitations, certain guidelines allows portals like mine to raise funds through unaccredited investors. There tends to be a lot of checks and balances on those, as there should be. But very, very quickly, we're not talking years, we're talking likely later this year, in a couple of months here, Reg A Plus is going to come out. And Reg A Plus is going to allow portals all over the place. My portal is going to be all over this, so most of my competitors. And that's going to allow us to work with unaccredited investors. So we will still have our checks and balances, we'll still have our limitations, but it makes the process so much easier. There are a lot of protections still for unaccredited investors that we'll work within, but it streamlines the process so much that it allows projects like this to actually happen. So right now, I would say, just to summarize, it's limited, but very shortly it's going to become very widespread. It is the holy grail of crowdfunding.
Yes, and Frank, that is a great question. So just to kind of summarize, Regulation A, and this is kind of an interesting thing, and maybe you guys are noticing this too. Crowdfunding is really awakening old regulations that have been around for a while, and now because it's this crowdfunding craze, like people are just rediscovering it and saying, you know what, with the technology that we have, maybe we could do this easier. So like there's a lot of old funding options that are coming into play, and I think this is great for everyone because really crowdfunding doesn't have to be your first option. I mean, it could be and it should be in certain cases, but a lot of times you might even find another option besides this that you just didn't know about. So with the Regulation A offering, that is essentially allowing you to raise money from unaccredited investors. It sounds great. The only problem is you have to go go through all these state regulators if you're getting investment from multiple states. So let's say you're in Connecticut like I am, and I raise capital for a 50-unit building, but I raise capital through Regulation A from all 50 states. That means that I now have to put an offering together and get it approved through all 50 state regulators to even be able to raise the capital, and that could take months, maybe even years. Is that I mean, I oversimplified it. Chris, is that accurate? You're the attorney. Is that an accurate statement?
Yep, that's absolutely fair.
Okay.
I agree.
So yeah, so that's Regulation A. Then another option that Jason mentioned is intra. Is it intra or inter?
Intrastate funding.
Yeah,
crowdfunding.
Correct. So intrastate crowdfunding is because the Securities and Exchange Commission is taking so long with passing these rules for the unaccredited investors, states individually are taking it into their own hands to say, you know what, we can pass a law within the borders of our state that says you could crowdfund now for unaccredited investors, but only within the state, meaning you can't raise capital for a company from Georgia raising capital in Georgia in Indiana. So if someone in Indiana wants to invest in this Georgia intrastate offering, they couldn't do it. But if you're a Georgia company raising money from a Georgia investor, right now in Georgia they passed these intrastate laws, and you could actually raise capital for these type of investments. So, you know, if you guys want to get political, you should be talking to your state regulators and state legislatures and saying, why don't we have intrastate laws right now? Because technically you could do that right now if you had a state that allowed that to happen.
And more states are actually picking this up. They're getting very interested in this and starting to investigate it on their own. I predict within the next 12, 24 months, you're going to see a huge chunk of our nation, as far as individual states are concerned, picking up their own crowdfunding requirements.
Yep. Bless you, by the way, Jessica.
Oh, thank you.
You're welcome. So thank you for the question, Frank. We have another question as well from Pete. And Pete, I apologize if I'm going to butcher your name. Pete Kushave, I'm guessing. Pete Kushave, PhD. What could reduce the double-digit yields lower? So I'm guessing the costs to the developer as far as the cost of capital, essentially. Is there ways that that the rates could become lower through a series of maybe better credit or track record, or is it always the same rate?
So we do like to provide a level of reliability and transparency so that our developers know what they're going to get ahead of time. That being said, the rates are dependent upon the associated risk of the project itself, how lucrative the project actually is, how short-term the project is, the track record of the developer. There's a lot of factors that actually go into it. We want to make sure that we are as fair as possible to our developers while at the same time offering a really good product for our investors. Our investors are after yield. And so the yield needs to be high enough that they're still interested. In the market itself, I think you might see some rate compression down the road as more and more capital enters the market and is competing for the same amount of opportunity, the same amount of projects. You'll probably see some compression at that point. However, there's enough opportunity out there at this point, and it's just huge, that without even sacrificing your underwriting criteria, I think those rates are still going to be fairly good for a while. With our developers, we don't charge a prepayment penalty, and our investors love it and our developers love it. What it allows us to do is to give a good rate to our investors, but if our developer wants to get out of the project, sell the rehab and sell the project early, they're not paying that full double-digit rate. Our investor is able to roll their funds over into a new project instantaneously. It's all online, and still maintain that high rate, but our developer is only able to pay a portion of that rate because they're in and out fairly quickly.
Okay. Here's just another thing, because this usually happens when there is competition. Another way that rates could be reduced is if you have a lot of people joining in the same business you're in. Then you guys might need to become more competitive too. Is that a risk for you guys?
Yeah, that's always a risk. There's a lot that go into the individual rates besides just who's offering them, though. I mean, there basically is a level of risk inherent in any particular investment. We're pretty proud of how secure this particular market is, but competition will always cause every business to try and fight for business, and that's what we intend to do. And we're able to show a good return now. We'll be able to show a good return in the future, even if we have to drop our points a little bit.
Makes sense. And I will say this: the one thing that differentiates you guys, well, a couple of things that differentiate you guys, but just from what I see is the fact that you do the pre-funding, which is such a huge benefit to a developer. And then also the fact that you're focusing in on the debt side of the equation. There is the equity side of the equation that some platforms are doing, but you guys are focusing on a niche, and you're becoming the authority in that space. So I think that strategy for patch of land is going to be great for your company, but great for the people who come to you, because you're going to be the experts in that space.
Yeah, we believe so too. Thank you. In fact, on that note, we have a lot going for us besides just our rates and just besides our speed. We have one of the best client experiences out there, I believe. So being able to offer both our developers and our investors a really good experience counts for a lot. Their credibility, our track record counts for a lot. So we can compete on several different levels besides just raw dollars and raw percentage points.
Mm-hmm.
Cool. Well, Manolis and Jessica give you guys 2 thumbs up. So
thank you.
Here's another question we have from my good friend Eric Kaufman. Eric, thank you for the question. What about crowdfunding for existing properties? In other words, apartment developments, single-tenant buildings, restaurants, or office buildings. Do you guys see an opportunity, whether it's through patch of land or through, just in the future? And maybe this is where you guys can both give you that opinion. But Jason, what do you think? Do you guys work with existing properties that are kind of turnkey, or are you only looking at these rehab deals?
So actually, there's a lot of opportunities. There's a lot of different financial products that we can offer as the market grows more sophisticated. And absolutely, there's an opportunity. So there's long-term refinance opportunities. There's buy, hold, and rent opportunities. There's tenant improvement opportunities. There's tax lien loan investment opportunities. New construction. There's an enormous amount of range of financial products that's out there. Right now, the industry is still so new that we're all focusing on on the highest opportunity projects. But yeah, absolutely, existing turnkey that don't need a lot of rehab. There's still a lot of situations where a developer, an investor might need to be able to finance a product like that and would turn to the crowd to do so.
Great. And Chris, I'd like to turn to you again because you have an interesting situation. You are actually in your real estate club's meeting at the moment, right?
No, I'm doing a private mentorship with a small group. My New Jersey Real Estate Investment Club is 75 people. I've got about 8 or 9 in the room right now. By the way, guys, let's hear it. Come on, clap. So I invited them here to sit in on this call tonight. But these guys are individuals I'm personally mentoring, and they're future clients of Patch of Land. So I'm building Patch's client base as we speak.
Well,
I expect to be in that room at some point, Chris.
Excellent. Well, what I see is, the REIAs are going to be turning into mini syndicates. I mean, what is your opinion? Do you think REIAs are going to be transforming as a result of crowdfunding to the point where essentially they become kind of like a mini syndicate? What do you think of that?
Yeah,
well,
absolutely.
Yeah, go ahead.
Go ahead, Chris.
Yeah,
Well,
I'll get to Chris. Yeah.
My investment club has been a great source of finding funds. Okay, private money. Clubs will match up all type of individuals, everyone you need. If you need your accountant, you need your funder, you need your title company, you need your rehabber. They're all at those meetings. So when you walk into the New Jersey Real Estate Investment Club, every time you walk in, there's a Patch of Land flyer that sits on the front desk, and those have been going like crazy. We had a giant stack. We need to have a small stack, which reminds me we need to get more of those, Jason. So send me another.
I'll get those sent right out. You'll have them by Monday.
But yeah, so even before crowdfunding exists, the real estate investment clubs were a place to find funding for your deals. But as the clubs have been growing and the real estate market comes back, I think that's going to be more tied to things like crowdfunding websites. In fact, I think it's a great opportunity for a crowdfunding website to tie themselves to investment clubs, to promote themselves at investment clubs, make appearances at those investment clubs. I had a panel about 6 months ago, and it was 8 different hard money lenders. That was before I had the close, tight relationship with Patch of Land, and I could see a situation where we've got 3 rehab lenders, and then maybe 2 crowdfunders, and then maybe 2 traditional lenders all appearing on the same panel, servicing that target market, which is the rehabbers.
And maybe one reality TV show host.
we can do that too. We can do that too.
Excellent. No, I agree with you. I see the future of these REIAs being more towards practical action and risk mitigation. If you have large clubs of 75 people, each pulling their resources together towards a great deal, you no longer you're eliminating the fear that a lot of people who go to REIA meetings have, in which the fear of the unknown. You just don't know. You don't know if your deal is going to be right. You don't know if the numbers are right. But if you have someone who has experience and they're bringing a deal and they have all the ducks in a row, not only can everyone invest together, but they can learn together, build trust together, and suddenly you're getting people making wiser decisions with their money on a much larger scale. So I really think that REIAs that get ahead of that are going to be a very, very hot commodity.
Sure.
Absolutely agree.
Yep. And all right, so we have about 6 minutes left. So, Jason, I'd like to give you the opportunity to answer the question of where you see the industry 5 years from now.
Sure. So I mentioned earlier that as this new crowdfunding industry gains credibility and gains track record, it's going to move more and more into the mainstream. We occupy this really, really great niche between the over-regulated, inflexible capital structures and the small mom-and-pop, fragmented, hard money guys that may be out there, private money lenders, friends and family as far as equity is concerned. this is going to grow beyond the smaller projects and into some very, very large projects. You're already actually seeing this right now. Some of the project sizes are heading north very, very quickly. On top of that, it will move towards unaccredited investors, and then it's going to get a lot more attention. The ability to own real estate, the ability to work with real estate and have your own little piece of the planet or patch of land resonates with everybody on some level. And to be able to participate in this particular market, which has traditionally been one of the most lucrative out there, for extremely low minimums, not having to take hundreds of thousands of dollars or millions of dollars to actually be a real estate owner or a real estate manager, and still be able to invest and participate. It's going to be very, very powerful, especially when it comes to the general crowd. And that's going to happen very, very quickly. There's already been rumors out there, and actually for movement on a Jobs Act 2.0 to actually make this even more streamlined and more palatable to individual investors, to the states themselves, and regulators all over the map. You're going to see it start to globalize a lot more. We get applications and requests from investors from all over the globe already, and there's a lot that actually goes into being able to take international investment, to work in foreign markets. But Manolis, don't tell me you wouldn't want to own some little place in Paris somewhere, or a small investment, or a Swiss ski chalet. And there's a lot of interest in the U.S. real estate market. We have an enormous amount of interest from the Chinese. We have an enormous amount of interest from South American audiences as well. And being able to work with them is going to be very, very powerful. So as we move forward, we're going to see the access grow massively from accredited investors now to unaccredited investors. It's also going to act as a bridge to the traditional capital structures. You're going to see the projects get much more sophisticated, much more creative. There's going to be a big push for socially responsible investing as well. And with traditional offline investors, it's hard to make that pitch that you want to build low-income housing, or you want to rehab a church into a women's shelter. But that actually does hit a chord with a lot of regular folks out there that might be willing to chip in a small amount each, and if there's enough of those folks, that can add up very, very quickly and make great projects happen where in a traditional investing world they might not, but still be able to show lucrative returns. And I think that's going to be a great story to tell here very shortly about not only the creative ways that capital is being put to use in the real estate market through crowdfunding, but also how good it's helping the community itself, how much it's going to help the community buy back the community. You're going to see a lot more community ownership of their own neighborhoods, and I think it's going to happen a lot more quickly than anybody thinks. The internet has transformed pretty much every industry that it's ever touched. There's no reason why it shouldn't be transforming the real estate industry now, and do it very, very quickly.
I agree with your predictions. I personally believe that crowdfunding is capitalism's last hope. It's like the income inequality that's experienced, and there's a number of reasons for it. But I really feel as if this is an outlet for even angels to use, even venture capitalists, people who just can believe in an entrepreneur. They could come in and really help that person raise the capital they need to create a small business, which then in turn would create jobs, and in turn would generate spending for existing businesses. I mean, what I believe is happening is just the circulation, the circulation of money, not by banks, but by people funding people, and to me that has the ability to not look at things just black and white. Let's look at the things that matter, like character in an entrepreneur, and the local market and how that works as opposed to the national market. So there's a huge opportunity for this crowdfunding movement to really make the world a better place.
I completely agree.
Yep,
and so, absolutely agree.
Yeah, so I think we share that passion. So All right, it's 9 o'clock. Chris, I'm going to give you the last word, and then I'll just sign us off for the evening.
Sure. I couldn't agree more that it's going to be the real estate investor who turns this market around, and the democratization of capitalism, as the way I would describe it, is going to strengthen the whole process. It's going to supercharge. The reason why this real estate market has taken so long to rebound is because it's been starved of capital. And not just on the rehab. The question before was what's the future of crowdfunding? I think you'll see patch of land move outside of a niche into different categories where they will fund an office building, they will fund a long-term hold, and they'll fund internationally. Right now there are several crowdfunders out there, but they all differentiating themselves, and they'll all do that in the beginning so they can build their own niche. But I see a future in which patch of land will fund your office complex, they'll fund the development of a sports arena, and they'll do the two-family rehab in Newark. They will diversify their portfolio so they can offer more types of investments to their partners. Now, the returns are going to be lower on that long-term hold, just like there's different types of investments. There's places in the stock market where you've got your AAA rated bonds, and you've got your risky investments, and these will continue to diversify. So if you want that 15% return, well, then you're going to have to take a little bit more risk. But also, patch of land will offer you this long-time established office building in Park Avenue, Manhattan, that you may only get 4 or 5% return, but it's super, super secured, and that's going to be part of your overall portfolio. So I see patch of land and similar crowdfunders building out to a very full-service crowdfunding opportunity.
Absolutely. Thank you for that, Chris.
Great. Well, gentlemen, it's been a pleasure. Viewers, without you, we couldn't be doing this. So thank you so much for watching, and please tune in for our next episodes coming up. You'll receive a notification. And just like every time we have this show, until next time, dream it, believe it, achieve it. Have a good night, guys.
Have a good night.
Bye.